Hello, this is Patrick. Welcome to Chart Built Wealth, Profitable Investing with Technical Analysis. I wanted to put out a new buy recommendation today. It is on the cannabis ETF. The symbol is M as in Mary, J as in J. So let's get into it. Okay, so uh, the actual title of the ETF is Amplify Alternative Harvest ETF, but it's basically cannabis stocks. In the past I've used MSOS once very successfully, and the second got stopped out with a loss, I think a 5 or 6% loss. But the first time made a lot of money in cannabis. On this comparable chart on MJ, it was probably in here where we got the spike correct and then tried to buy it again, and then it broke support and we took a loss, but overall it was a big gain. Anyway, um, here we are. This is similar to the solar stock ETF, TAN, which I recommended a couple weeks ago, which hasn't done much. I think it's up slightly, but these are broken trends. These are stocks that have been in big downtrends going back to 2018. You're looking at a $408 ETF and it got down to a low of 16. So, as a market technician, again, I'm trying to identify new trends at an early stage and then stay with those trends until they change. REMX, the and MP, uh, the mineral companies, those were similar. So, the rewards can be big, the risks are big too, because these are definitely in downtrends. And I'm trying to identify a significant low and then see where we go from there. So, just one, I'm going to try to make this short. I'm not very good at that, but um, from the uptrend, I use what we call an Elliott wave theory as one of my tools in my toolbox that I'm trying to put together a puzzle with. And the Elliott wave theory says that trends or cycles go in waves of five, with one, three, and five in the direction of the bigger trend, and two and four are counter trend reactions. So I thought you might find this interesting. It's a great tool. It's one of 20 that I might use. And what this is suggesting is that we have five waves down and that this should be the end or near the end of this entire downtrend. And then what we would get is an A, B, C correction um, that would retrace anywhere from 38% to 61% or possibly even 0.78% of the entire downtrend. Those are Fibonacci retracement levels. So normally things will retrace um, into the area of the third and fourth wave. So somewhere in this area. So why do I like this? Well, I like that. There's a question here though whether this fifth wave is complete because you got one within a fifth wave you should have five waves. Within a third wave you should have five waves. So the way I count this is one, two, three, four. We don't have a lower low for the fifth, but sometimes you get what they call a truncated fifth wave where it doesn't quite hit the low. And in an ETF like this, it's not real liquid. That could certainly happen. So what I do like though is that this second low here, we got a much higher low on our RSI or relative strength index, suggesting that um, the this last low went down on less oomph. There wasn't as much intense selling. So anyway, I'm looking for something up in this range from 28 to 53 on a rebound. So let's take a look at this maybe 2024 to 2025 now to get a better idea what's going on. That's just big picture stuff. And what we really want to concentrate on, and the reason why I'm making this recommendation today is because I think the setup is pretty good. So, here's what I think will happen in A, B, and a C. So, this suggests we're in the C wave, which could carry up around 30 or something, 28 um, to 36, I said. So it could, there's significant upside. So within the C wave, I think that we've had our first wave up and now we've had an ABC correction. So since this is now the trend, the short-term trend is up, we have a five-wave advance, one, two, three, four, five, and now we've had an ABC correction. We had a nice little bullish hammer yesterday. So, and we have a confluence of moving average support right here. So this is what you would call a type two rainbow convergence where prices come back to that convergence. And if it can hold here and not break this convergence, it promises, quote, promises another higher high, which would be above 23, which would get us on our way. So I'm recommending buying this and putting a 19 stop. So I'm got a pretty tight stop here because we don't have a big pattern. We don't have a 15-year copper symmetrical triangle, which gives me a lot more confidence in trying to pick a bottom in something like this. So um, that's why I got the tight stop. So let's take a look at the point and figure chart. Here's a point and figure chart. We still got a bearish trend line by a wide margin. So, I like when I have a bullish trend line and all is in alignment, but you wouldn't find a bottom from a stock or ETF that went down from 400 to 20 or 16 or whatever it was. So, but what we do have is a buy signal on the point and figure chart. So the trend is still bearish, but we have a buy signal here where this row X has exceeded the prior. And based on that, it gives us a price projection at 35, which would challenge the bearish trend line, which makes sense. That would be a good place for MJ to turn down again. So I'm recommending buying MJ with a stop at 19. It's currently at 20, 2018, and that's my recommendation. I'm going to try to cover some of the other, all my current buy recommendations, maybe later today or tomorrow. Thank you for watching. Have a great day. Thank you for watching Chart Built Wealth, Profitable Investing for Technical Analysis. Please like and subscribe. Again,